I'm Jane King for Smart Money Matters. Thank you for being with us. And we're here with Dryden Pence, an economist and portfolio manager, Harvard educated, also a retired Army colonel whose expertise is in psychological warfare. Welcome, Dryden.
Well, thank you, Jane. Happy to be here.
We're talking about choke point investing. So that's a term that you coined. So what exactly is choke point investing?
Well, it's kind of a modification of a military term, and it's that point in place in a supply chain of human demand where everything has to go through that point. Think of it as a road between two mountains, so the valley, or think of it as a place in time where one company or a couple of companies can dominate the supply chain between human demand and its satisfaction. So it's really where just a couple of places where people can dominate, and the companies that dominate there, they have pricing power. Pricing power turns into excess earnings. Excess earnings turns into either growth or better dividends.
Okay, and what are some real life examples of choke point investing?
So an example like that would be a toll road or a toll gate. For you to get from where you want to be to where you're going, you've got to pay the toll. And you see toll roads now that have variable pricing, right? The price goes up higher and higher when traffic is greater so that they can regulate the speed on that. That's one example.
Okay, and then another example, your cell phone service?
Exactly. So I don't really care when you look at a cell phone system. When you look at the essential elements of it, towers are very important. So I don't care whether it's Sprint, AT&T, T-Mobile, or Verizon. I want to own the tower on the hilltop that everybody has to rent from to make their networks work. That's the key element.
Okay, and Coke versus Pepsi.
So we love this one because I really don't care who wins cola wars. Coke versus Pepsi, I don't care. I want to be the lining inside the can that both companies have to buy so the drink does not taste like aluminum.
Okay. Now, some of these choke point supply chains particularly may not be so obvious to average investors. How do you find them?
We have to really break apart the supply chain, and then you have to determine which companies are deriving the most profit from their point in the supply chain. So when you think about communications, you have Apple and Samsung and LG all make cell phones, but Apple is the one that derives the most profits. So you want to look at not just who dominates, but who's actually making the most amount of money from that behavior at that point in time. So you have to do a lot of fundamental research on the supply chain and the individual companies.
Okay, an important conversation about choke point investing. Very interesting. From Dryden Pence, economist and portfolio manager. And thank you for joining us. I'm Jane King for Smart Money Matters.